Welcome to the Happy Disruptors podcast. If you're a creative thinker with an unconventional approach to your industry, you just might be a happy disruptor. Join your friends at the Great Outdoors Foundation for honest conversations about tackling critical issues like conservation with an uncritical disposition. If you like to smile and get things done, this is the podcast for you.
Hello and welcome to the Happy Disruptors podcast. I'm Katie. And I'm joined again by
Hannah and Min.
Yes. And we are continuing on our series previewing Athene Watershed26 and all of the fantastic sessions that we'll have there. Today, we are focusing on the finance solutions content track. So really excited for you all to hear about that. If you haven't listened to our previous 3 episodes, make sure to go back and listen to those. So Hannah, before we jump into the sessions themselves, why don't you tell us a little bit about the makeup of your committee who's advising on these?
Yeah, so I think our committee makeup is really indicative of where we're at in conservation and conservation financing. I think the traditional model has always been, forms of philanthropy and then also government funding.
Right.
And even before the retrenchment of federal funds, there were a dedicated group of individuals working on more sophisticated mixes for conservation. I think everyone's trying to figure out, how do you make conservation part of a market solution? So we have consultants that work in this every day. We have financiers from the banking perspective. We have large philanthropists and funders that define how philanthropy moves and are very much at the forefront of that. And so it's a great mix of all the different types of capital that are out there, which I think shows itself in the diverse mix of what we have at Watershed.
Absolutely. I think that is it's really fascinating to see how just in what seems like a very short amount of time, the level of sophistication now available for financing conservation solutions. And I think the beauty of that is it really starts to widen the pool of money and kind of rethinks the incentive structure so that, to your point, it actually integrates it into the business model versus utilizing maybe like a traditional grant structure.
Yeah, I think when we think about conservation in its traditional form, it was very heavily funded through government subsidies, right? And that's a direct result of the Dust Bowl in the 30s, and where conservation started to become more and more a part of business decisions. And so the government stepped in the 30s because it was a crisis type situation.
Right, yeah.
And even before that, like when you talk about parks and outdoor recreation and conservation in the form of place-based conservation, with Teddy Roosevelt and the National Park System. So it's always been very much a government role. However, as industries like agriculture and manufacturing and tech start to evolve, really those natural resources are becoming part of a market.
Yeah.
And so the scale and pace that we need conservation to evolve to is not sustainable with just government subsidies. And so because it's part of a market, it should be part of a market solution.
Yeah.
And so it's just been really exciting to watch, even pre the retrenchment, the evolution. And I think the retrenchment of federal funds has caused more and more people. So we've moved past sort of the early adopters and some of those pilot programs to, okay, this is a necessary business development if we're going to maintain our natural resources how we want to maintain them.
Yeah, most definitely. And you've already hit on several of the themes that your particular content track will cover. But what would be a typical audience member for some of these sessions?
Yeah, that's a really good question. I hope that those project managers, those people that are putting together these really high impact projects are part of this track, right? Because it's going to give them just more tools in their toolbox when they're talking about, okay, we have this great project, or we want to do a portfolio of great projects, but maybe the NRCS is tapped this year. Maybe we don't know, maybe we don't get another farm bill. So instead of the work stopping, maybe this gives them more tools to be able to identify ways to get those projects funded. So I think that would be a really great audience for this track. I think it's also those people within the funder and within the financing world. I think one of the biggest things that we're still trying to figure out as the conservation financing industry is what role each player plays. What's the role of finance? What's the role of philanthropy? What is the role of government? Because government's not gone, it's still there. And I think understanding the role of each and the restrictions or the burdens that all have, and then what their vision is, helps to get us to a more streamlined solution. So is philanthropy always going to have to be part of the mix? I think philanthropy's hope is that they can be catalytic, but they don't necessarily want to have to be there for the whole time, right?
Yeah.
And as we move from pilot projects to scale, you know, some of our old ways of thinking about financing for the project, like, are we always going to, you know, dedicate $1 per acre for farmer incentives? Or is that ultimately at some point going to partially be picked up by the market? And what has to happen for that? What has to be built for that to happen? So I think there's really something for everyone. And those are sort of some of the people that I'm really excited to have in the room to have some of these conversations.
And I think the cool thing is this is really bringing together many of the folks who are already involved with the work with the Conservation Acceleration Fund and our partners who are working kind of at the forefront of those pilot projects. So I think the conversations and just the level of expertise that we'll have in the room, I feel so grateful that we have folks who are willing to say, yeah, I will absolutely come and give my insight on this particular topic.
Yeah, I think we got some of the best of the best. I'm pretty excited about that. Even when you look at, you know, federal and state funding are still going to be a crucial part of this mix, but it becomes more of the anchor. And so we're going to have people that are going to talk about new ways to use some of that anchor funding, reimagining it instead of just, you know, your traditional bond or your traditional loan or things like that. How can you use that to leverage additional dollars? What does that capital stack look like? And I think the most important part, and I think this is where there will be a differentiating factor of Watershed, is that these are people that are really deep in the work. And they're really deep in the work, not just in the upper Midwest, not just in the Mississippi, but across the country, and in some cases across the world, which helps to bring perspectives of things that have worked in other places. Maybe it's for forest resiliency or wildfire resiliency, but some of those same structural infrastructure can be applied for water management here in the Midwest. So I'm pretty excited about just the relevancy of the content and the experts that are going to be in the room.
Especially when you consider that, you know, 9 times out of 10, one of the largest barriers for conservation projects to move forward is that funding piece. So it feels like this is an opportunity to unlock new perspective for folks who are doing that critical work on the ground.
Yeah, I would say it's funding in its scale, right? Because of how the people that are doing this work on the ground are having to look at funding right now, it's project by project, geography by geography. But if you start to unlock funding that is operating at a larger scale, then you can start to create synergies with your counterparts in other areas to leverage funding for the entire watershed, not just your borders, right? And so I think that the funding that could be unlocked, but also the scale in which people can do their work, it's going to be really exciting to see what comes of it.
Yeah, absolutely. Okay, well, we have teased them enough. Let's go ahead and jump into, let's talk through the sessions that are a part of the Finance Solutions content track. So starting off strong, the State Revolving Funds, a tool for water quality financing.
Yeah, so all states have a state revolving fund that they use for non-point source or point source, but non-point source water quality work. And there's some states that are just really doing some interesting things with it. And again, it's thinking outside of the box, outside of those traditional programs, looking at what's really in the enabling legislation and what the goals are to be able to try some new and different things. I always think back to, when most of our rules and regulations and programs came out, you had the 1930s and you had the 1970s. And now here we are in 2026 and the world is completely different. And the world 5 years from now is going to look completely different. And so we need to match our scale, but using those existing tools and understanding how they can be used. This is going to be one of my favorite sessions. I'm really excited because it's just not how to access that money, but it's how do you leverage that money for additional funds and how do you start to create those capital stacks, because you're doing great water quality work, but a lot of times there's other things besides that.
Right.
And so what does that mean and how can you capture that?
Yeah. And to really maximize, as you said, the legislative definition of what those funds can be used for and kind of taking that creative lens, which is so important. Okay, next one. Speaking of leveraging additional dollars, this session is leveraging conservation bonds.
Yes. So this one I'm even more excited about because this can be really done on a micro level or you can, do it on a macro level. But you think, especially the state of Iowa, we've been really successful with conservation bonds, right? They're county bonds. They're usually done through the conservation boards, but they have a high level of trust with their voters, right? Because their voters are seeing and feeling the results of those bonds on an everyday basis. Right. And so typically when these bonds pass, they pass at a really high rate. Right. So even the threshold to get these passed is 60%, but oftentimes we're seeing 70, 80% approval ratings from voters for these bonds. And so it's clear that the voter feels that conservation bonds are important. They like what they do within their community. How amazing would it be if we could look at this as a leveraging tool that leverages conservation, not just dollar for dollar, but dollar for $4, dollar for $5.
Right.
Polk County Conservation has done that extremely well, and they're on their second bond now. And there's others, but there's things outside of that, right? There's outcomes that people might, or organizations or funds might pay for. And so taking that concept, taking the success and the track record that we've had on it, and really fine-tuning it into something that is a huge multiplier for the region.
Yeah, and I think that session will be really interesting too, because it's a really interactive workshop. And so, depending on the role that the attendee has in their professional world, there are going to be some really pragmatic takeaways, which I think is so helpful.
Yes, because it's a workshop, it will really be designed for who's in the room and how to get your questions answered, how to think of it differently. Yeah. And you'll have some great experts in there to help you workshop that. So I'm pretty excited about the format of that one.
Okay, next session, funding spectrum rules, understanding and maximizing functionalities. This is exactly what you were talking about earlier.
Yeah, I think there's a lot of really great work happening out there for conservation finance. And it'll start as a concept and then it'll get to the end and maybe there's a slight misalignment or miscommunication about who can do what and whose responsibility is that. And then I think there's an overall theoretical discussion that needs to be happening. There are more and more philanthropic funders that are trying to move to impact investing, right? So it might be low to no interest loans. It could be, startups or funding orchestrators, things like that. But they're moving from a traditional grants-based system to more of this impact investing, which had been reserved mainly for these financiers and really in for-profit spaces. But it's a fascinating concept to think about because, in traditional venture capitalism and things like that, you have a real rate of return, right? It's for business. It's to generate income. And so if we're switching that to a combination or a hybrid of building to that, right, where some of these conservation efforts become part of the bottom line of decision making, or it's purely for the returns, how does finance evaluate that? How do buyers evaluate that?
Right.
How do you build the infrastructure that you have verifiable claims that aren't just greenwashing? And as philanthropy moves to that impact investing, is it really riskier than the traditional grant? Or is it just a different lens that you need to look through it? And what is the acceptable rate of loss or failure? Because in a grant scenario, you're not really truly measuring that failure rate.
Correct.
Right?
Yeah.
Because you're not measuring outcomes per se. So when you move to impact investing, there is a clear pathway to having verifiable outcomes. And that's what we hope that it does. But what is an acceptable failure rate for philanthropy on that? And so I think that's something that the impact investing world has to get around. And I think that there needs to be a more agreed upon theory of change. And what are the roles and responsibilities, right? Because finance is coming in usually looking for big returns or something like that. And this may be more of an impact play for our financing partners, but it's still going to be different than, an AI experiment.
Right. Yeah. And I think it's so interesting when you start to identify those maybe individual motivators as well, because, to your point earlier, sometimes there's just a miss on what the desired outcome is for that particular entity who's participating in this funding structure. And so if you can get aligned on those at the front end, all of a sudden you are working with this really dynamic capital stack that isn't accessible with just a traditional grants setup. Yeah.
Well, and I think the other thing, you're completely right, Katie. I think the other thing that maybe hasn't been addressed in this whole scenario is a lot of the conversations are going between funders and financing, but it's not always is the middle, the actual NGOs and nonprofits part of that conversation. And talk about a huge shift in governance for those nonprofits. We've been in those, right? We have a really supportive board. We have a lot of visionaries on the board that have also been in this in real business, right? And understand all those things. Even if they don't understand our deal, they understand where the risk reward lies. And they maybe have a healthier tolerance to risk than someone else in that that board position that maybe has a more traditional role for their daytime job. And so as we start to unlock this capital, we're going to have nonprofits whose board and whose staff is ready to do those experiments, to do it, and are comfortable with some of that risk as you transition from traditional philanthropy. And then we're going to have some that aren't.
Yeah.
But that's not really helpful for the whole ecosystem because we need all of those players. We don't need less conservation NGOs out there. We need the really great ones that are really healthy to keep doing the work that we're doing. So how do you transition them along as well and give them the resources and the boards? So I think there's that part of the governance that will be really interesting. And I don't know what that looks like yet, but there's a lot of education that needs to happen at the nonprofit level. And again, it's going back to, everyone thinks of nonprofits as these small, pull yourself up from the bootstraps, everything's going to the mission work. And, but as we privatize more and more things, I've said this on here a million times, but as we privatize more and more things where the role of the government used to be there, the role of the nonprofit is incredibly more sophisticated. And so our view of what a nonprofit is especially in these spaces, and you see it in food, you see it not just in conservation, you see it in a lot of different ways, that role and our view of what that role needs to change pretty significantly.
Yeah, definitely. And that, listeners, you've heard us reference this before, but we have our dynamic partnerships content track that's a crossover between all of the others. So this session is that dynamic partnerships session, and just going to be, again, kind of like creme de la creme of the folks who are working in this, who have the experience in these unique funding relationships. And so I'm really excited to hear that conversation. And to your point, start to peel back some of the layers of maybe the issues within the system that need to be addressed for this to really be implemented at scale.
Yeah, and I'm excited about the people that will be on the panel because we're having these conversations in real time.
Yeah.
And I love the spirit of which everyone is coming to this session because we're all deeply committed to figuring this out. And I think that it will be a really insightful panel. I'm excited for it.
Agreed. Okay, next session is outcomes-based financing for conservation practices.
Yeah, I mean, outcomes-based financing is not new. I mean, it's new-ish in the long theory of things, but we've had, especially in Iowa, we've had a lot of organizations do it really, really well. Soil and Water Outcomes Fund out of that was incubated out of Iowa soybean is probably one of the premier ones that has just sort of changed the game. But outcomes-based financing is it's never going to go away, right? And it's going to be an important part. But I think what is changing is, one, it's becoming acceptable. It's becoming, sort of one of those standard operating where you start. But how do we accelerate the delivery of that when we have so many unique programs? If you think about the people that are financing or paying for these outcomes, they each have sort of their own unique snowflake that they're trying to hit, right? And so and that makes it really difficult for the middle people that are trying to package these programs. And it makes it difficult for the farmer, right? Because flows disrupt. If all of a sudden someone was really into carbon and then we don't see the carbon market, or we see a pullback in the carbon market or something like that, and now we're moving to, biodiversity, that doesn't give a lot of consistency for planning for the farmers. And it quite frankly doesn't help with the theory of change and the adoption of those practices, right? In addition to that, what happens when those outcomes, based payments go away?
Yeah, the practices often go away.
And the practices often go away. So maybe we have failed in some of those outcomes-based financing. I think that the working theory for years were like, if we could get farmers to do this for 3 to 5 years, that gets you over the yield issue, that gets you in the investment in whatever practices, that gives you the knowledge base. And so if those outcomes-based payments go away, we'll still see that. And we're not necessarily seeing that right now. And I think there's a lot of studies being done on that. So if the outcomes-based financing or those benefits are going away, is it really, how do we make it a sustainable investment where the practice continues, or does the market pick it up, right? Does the market pick up, and are you seeing it in the premium because we've recognized at the end user and at the middle infrastructure that practices grown in this way are valuable and we're willing to pay for it? And I think right now we're seeing it, from a market perspective, that that consumers will pay for products grown in certain ways. And I think farmers recognize that, and they're getting those direct payments. And I think the consumer packaged goods industry, all of those people recognize that. I think where we have maybe not seen adoption is that middle infrastructure, because they're not seeing it, right?
Yeah.
If there's a premium on the commodity and there's a direct payment to the farmer, that's great, but there's nothing for that middle infrastructure, and they have to make serious investment for this to really become a sustaining practice, right? You have to have different types of agronomists with different knowledge bases. You have to carry different products.
Right.
In some cases, you need to have a different distribution or different market system, maybe different
Processing,
and different offtake agreements. And so you talk about the infrastructure investment that has to happen at that middle infrastructure that's not receiving any of that economic benefit. I think that might be where we're missing it. But again, that's a theory of change that we need to test.
I think it will be really interesting. There's, again, going back to, who is paying for these outcomes? We've got CPG firms. We've got the tech sector now. We've got just private industry that has either through their ESG or CSR programs, they have desired outcomes, maybe less articulate or specified as those other two. But I think it will be really fascinating too to see how those can be layered and have, to your point, more sustained over many years funding opportunities for these practices, and hopefully some consensus around like what does it really look like to, outside of these individual practices, have this palette of interventions that are making headway.
Yeah, I think about this a lot because we're assuming that the market will support it. We've seen it, more, intangible with like early ESG investments, 5 to 6 years ago. So in the stock price, is it reflected, things like that. But then, and obviously there are people that really believe, there's organizations that believe that that is true because they're investing so big. And we're seeing it at the end user, when consumers go to pick different products, they're voting with their pocketbook. But I think the other piece that maybe we're talking less about, which is a different type of outcomes-based financing, is those that are doing it for controlling of natural resources. And I don't mean controlling, but safeguarding them.
Right. Yeah.
Right. Because if you have a disruption in that natural resource that you need. And this is from everything from manufacturing to ag to CPG firms to tech, water disruption, anything like that, then it changes your business. And we've, in Europe, they're very much ahead of the United States in safeguarding and thinking about it. I went to Europe a couple years ago and toured a lot of these different firms, and it is their number one strategic thing to think about is how these things are going to impact their long-term sustainability. I think in the U.S. there's more thinking of that, but maybe it's not as vocalized or as out front. But the sustaining of those resources and then how you finance them, I think is a really interesting piece that we haven't gotten our hands around.
And obviously, the piece that plays into this is European countries have much more government regulation. And so I think it's also intriguing. We have, as a society, we have coalesced around capitalism and the free market. And so I think that is a really cool tool that could be used long term for us. To your point, like how do we, instead of looking for top down regulation, how do we incentivize that within the market?
Yeah, and it's interesting also like watching some of the failures or missteps in Europe because yes, there is a lot more regulation, but they're still, capitalists. And there's an interesting case study if anyone wants to look it up, but I believe it was in the Netherlands. They were trying to reduce nitrogen by 50% in their waterways within a year. And so it was like a whiplash.
Yeah.
And before that, they had been investing heavily in getting more farms online and getting more production. So you had, and I don't know this case study really, really well, but you had government subsidies and incentives that were getting farmers to a certain level of, production and yield. And then within 12 months, we're trying to cut nitrogen by 50%, right?
Yeah.
I think there were like tractors like burning bales of hay at the Capitol steps or whatever.
Can imagine.
And I'm probably not summarizing this correctly, but everyone should look it up. But yeah, that's a misstep, right? That's and when you think about, especially in the ag, anytime the farmers get upset, that's when we have real societal problems.
Right.
But I fear that if we don't start addressing this problem more proactively with the farmers in an incentive-based type of environment, we're not setting the family farm up for financial success in the future.
Yeah, absolutely. Okay, last session, carbon markets for regenerative agriculture. I feel like regen ag is at the forefront of like everyone's mind right now.
Yeah. I just got back from a conference in California just talking about regen ag. And what's so fascinating about regen ag is it's worked really well in smaller markets in some cases, right? As California is probably more ahead, but that's because they have so many different, crops, right? You have the almonds, you have so many different ones.
Super diverse.
It's interesting to think about how regen ag translates to large commodities. And so I'm excited about this because this is a case study that really talks about that. I think the other interesting thing, and I'm sure it'll come up in this panel, in this discussion, is anecdotally within Iowa, the farms that are moving to regen, you have about a 3-year sort of, what the heck is going on? The land is like, what's going on? You're transitioning to, different levels of regen. But after about year 3, and this is multiple farms have showed us this, they are making hand over fist.
Right. Yeah.
And this is the time to do it, right? Because if you think about input costs and the increase of input costs over the last 4 years, it's astronomical. And this is where you start to move from yield to net profitability, and measuring your success by net profitability. And I understand that yield is incredibly important, especially to the commodity farmer, but we're talking real money where multiple families, generations of families, cousins, uncles, all those are moving back to the farm because now they can support more than one family farm on the farm. And so that becomes a really powerful message.
Yeah.
And it's not just the powerful message for like the ultimate net profitability of the farmer, which that alone is really significant, but it's a really powerful story for rural communities. So instead of, moving to Des Moines or moving to Minneapolis or, Omaha to get a job with, NRCS or Wells Fargo or whatever, you're now able to support your family living, a couple miles away from your aunts and uncles and their cousins, and they're going to the schools and they're going to the churches. And it's just really fascinating to see what regen ag can do when you make that shift to net profitability instead of yield.
Yeah, absolutely.
Yeah.
I'm really looking forward to that session. I think it'll be super fascinating, and how, once again, the private sector can play a role in that transition period, and how you make that make sense for the farm as a business.
Yeah, and I think that's something everyone's trying to figure out right now, is because I think private industry wants that. But how do you get there? And so this will start to unpack that.
Absolutely. Hannah, anything else you want to add about your content track before we have just a couple more things to cover?
Well, I'm just super excited of some of the people that I know that are coming to Watershed26 to participate as listeners and some as contributors. I'm excited to see what they come away with.
Yeah.
I think we've curated an event with some of like the best and brightest and most inspirational, both in attendance and in contributors to the sessions. And it's just always magic when those people get together.
Yeah.
And so, I love to entertain. And one of the reasons I love to entertain is because I love to get people together that should get together. And this is like on like steroids.
Yeah, exactly.
I'm excited to see what comes of the conversations that happen in the room, outside of the room, at cocktail hour. I'm pretty excited for all these people to meet.
Yeah, absolutely. Okay, so one thing that we have not talked about yet that it plays into this, financing solutions, innovation is our Convergence Conservation Ag Startup Competition.
Yes.
Do you want to talk a little bit about this? I'm so excited for this.
So one of the things that we talked about early in the Conservation Acceleration Fund is we can fund project after project and leverage billions of dollars and maybe still not get what our ultimate outcome and mission work is. And that some of what needed to happen were support for innovation, giving people that have these sort of wild outside the box ideas, giving them support that they need to go to the next level. Our traditional all over, not just in ag, not just in water, not just in conservation, but all over sort of our traditional infrastructure is crumbling, right? Our traditional institutions. But what I'm excited about is what is going to be built in its place.
Yeah.
And I think there are some people that are doing things that, man, if they just had a little bit of resource behind them, if they had a little bit of help, the outcome would be that much better.
Yeah.
And so one of the things that came out is, what if we did like a Shark Tank-like competition for some of these companies or inventions or, thought processes that were ready to scale, but just needed some help.
Yeah.
And so we're doing that. I think we have some bigger plans for it in the future.
Yeah.
But we're going to have a panel of judges. The audience is going to get to compete. And so I'm really excited about this concept.
Yeah. It's just going to be so cool to have these solutions that are bringing together, sometimes it's nature-based solutions, sometimes it's tech, sometimes it is a new invention of like a solution on the ground, either input or otherwise. And it's going to be really cool to see those like live pitched before the audience who, will get to weigh in on who is selected for the prize money. And to your point, I think our hope is long-term to be able to develop this almost into like an incubator that is providing that like wraparound support for these individuals or entities so that they can move from concept to scale as quickly as possible, because they're kind of the future for us.
Yeah, and I think what's fascinating too, as we think about the types, because it's live right now to be part of this contest. Certainly, there's so much innovation happening on the precision ag. There's so many, like the biologicals.
Right.
There's amazing tech tools. But there's also like really fantastic work happening on rebuilding that delivery infrastructure. And so I hope we get some of those too.
Yeah.
I think about if the batch and build was in its infancy, this would have been a fantastic avenue for that, right? So it's not just your traditional, like you have a widget to sell type Shark Tank. It's all of those things that maybe just need a little bit of prize money, but also, resources, because you're going to be in front of a lot of the best and brightest, and they're going to be able to offer some help too.
Yeah, absolutely. So excited for that. And yes, to Hannah's point, that application is live on our website right now. You still have probably about a week left to apply. So make sure to do that or send it to someone who might be a good fit. All right. Should we move into our favorite segment?
Yes.
Let's whiteboard. Okay. All right. So Hannah, my question for you today is, what is your desired outcome from Watershed 26? What are you hoping attendees take away? What are you hoping the community gains?
Yeah, this is like a lot of pressure because you're not drawing and we don't have anyone else here.
That's right. It's all on you. I'll distract them with some action
Perfect.
steps. So listeners, make sure to like and subscribe wherever you are listening. This is the fourth part in our series previewing Athene Watershed 26. So again, make sure to listen to all of those episodes. It'll give you really good insight into what to expect from the conference. And if you're listening to this, we're just about a month away, and so excited to be gathering this group of phenomenal individuals to look at how we address water quality at the convergence of conservation and agriculture. To Hannah's point, you can apply for the Convergence Conservation Ag Accelerator at our website, where you can also register for Athene Watershed 26. So go to greatoutdoorsfoundation.org for both of those items.
Okay.
All right. Did I give you enough time?
Yeah. So it looks like Harry Potter and fire, but it's glasses and fire. That's not steam.
Oh my gosh. I honestly thought that they were a couple of cigarettes. And I was thinking about like how in the movies, like all the best conversations, you know, like in the 90s, like people would go outside for like a smoke break.
And then they're like, we did it.
We did it. We
water
solved
quality.
it. Yes, exactly. But I'm sorry. Tell us what it actually is.
We're not looking for like a Philip Morris like sponsorship.
Exactly. Yeah.
So the glasses are, I hope that this gives a new lens that people that are doing great work, all of a sudden, you know, you put glasses on and you see things that are differently than when you didn't. And so we have so many great people that are doing such great work that I hope this gives them a new lens to do more of that work or how they're doing their work. And then ignites, you know, further continues. I mean, it doesn't need to ignite most, and you know, but continues to fuel what's possible, because it's a long, infinite game.
It is,
and this hopefully will one, showcase some solutions and some successes, but also give you the opportunity and the pathway to more.
Absolutely. So. I love it. Well, thanks so much, Hannah, for sharing some more about finance solutions. And thanks for listening. Thank you so much to Athene for partnering with us on this summit. So grateful to have you all as partners, and we will see you all next week.